Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. Welcome to another edition of our weekly podcast. Global equities trended mixed on region-specific developments. US equities continued their positive development earlier in the week on the news of tariff exemption on electronic imports, but came under pressure later in the week as global policy uncertainty lingered on. Asian equities staged a broad-based recovery led by Singapore, Hong Kong rising 5% each and India up 4%, while Taiwan, Thailand and China A-shares recording a decline of around 1 to 2%. Data for China's first quarter GDP and March activity broadly beat market expectations, driven by export front-loading in anticipation of higher US tariffs. Loan and credit data improved in March, while the 7-city average primary property prices fell further. Back home, Indian equities recovered after 2 consecutive weeks of decline. The Nifty index rose 4.5% for the week, tracking a broad-based recovery in Asian peers and improving foreign investor inflows into domestic equities. Broader markets performed in line with the Nifty index, with the Nifty Mid-Cap Index up 4.3%, while the Small-Cap Index was up around 4.5% for the week. Among sectors, realty, banks and telecom led the winners with gains of over 6% for the week. The Indian fixed income market had another strong week with government bond yields declining across the curve, supported by falling US bond yields, lower than expected domestic consumer price inflation and RBI's OMO purchases during the week. The yield curve steepened with the 10-year government bond yields falling 7 basis points to 6.37%, while the 3-year and 5-year government bond yields fell 16 basis points and 17 basis points respectively. Brent crude oil prices rose more than 3% on Thursday to post a weekly gain of 5%, supported by expectations of a trade deal between the US and European Union and rising supply concerns amid new US sanctions to curb Iranian oil exports. The Indian rupee rose 0.8% to close at 85.4 per dollar as a weaker US dollar, declining US bond yields and improving foreign investor inflows into domestic equities negated the impact of rising crude oil prices. Coming to the macro updates for the week, the first was on India's consumer price inflation, which moderated to 3.34% year-on-year in the month of March 2025 from the 3.61% growth recorded in the previous month, marking a 5th consecutive month of decline. The moderation was led by a sharper decline in food article prices amid deflationary pressures from eggs, spices, vegetables and pulses. This was enough to offset a rebound in prices of fuel and light and higher inflation for housing. On a monthly basis, consumer prices fell 0.26%, marking a 5th consecutive month of drop. Second data was on India's wholesale price inflation, which also moderated to a growth of 2.05% year-on-year in March 2025, slowing from a 2.38% growth recorded in the month of February. This was driven by falling food prices, which rose at the lowest pace in 7 months, while primary articles also moderated. Meanwhile, manufacturing prices accelerated, mainly boosted by faster rises in the price of paper and paper products, pharmaceuticals, medicinal, chemical and botanical products, and a rebound in basic metals. Fuel and power prices increased for the first time since July of 2024, boosted by higher LPG prices and softer fall in petroleum prices. On a monthly basis though, wholesale prices dropped 0.19%, marking the 5th straight monthly decline. The last data for the week was on India's trade deficit, which widened to USD 21.5 billion in the month of March 2025, much higher than the deficit of USD 14.1 billion recorded in the previous month. Imports rose 11.4% year-on-year to USD 63.5 billion, the highest ever for the month, despite the relatively low prices on fuel. In the meantime, exports rose by a much softer 0.7% year-on-year to USD 42 billion. At this point, I'll take a pause and thank you as always for listening. If you enjoyed this podcast, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.